Hello guys, welcome back to the Brutal Investor channel. I hope you guys are having a fantastic day today. So in this video, we're going to talk about Binance's new Launchpool token, which is the Litentry token, ticker symbol LIT. Again, today Binance announced that they're going to introduce Litentry or Lit on Binance Launchpool. You can farm Lit tokens by staking BNB, BUSD, and DOT tokens, right? So if you're a big fan of the Binance Launchpool program like I am, you probably know that if you hold BNB tokens on Binance, which is a centralized exchange, you can stake your BNB tokens or BUSD or any other tokens that are relevant to that particular farming program. You can stake them on Binance and you can earn new tokens which are initially not available for trading, but after a few days they are available for trading on Binance itself, and you can trade them for USD Tether, BUSD, or Binance Coin, or even BTC for that matter, right? So this is something that has been becoming very popular in the recent times, and the people who hold BNB also get this added utility bonus where they just need to hold on to their BNB, and it's also a flexible hold. So if you don't want to stake your BNB, you can remove it whenever you want. It's pretty flexible, and by participating in this, you will be getting exposures to all the new cool tokens that Binance will list it. And since Binance is the largest exchange by volume, you will have the best liquidity to sell those tokens, or even participate in staking rewards, which Binance will eventually announce for those particular tokens, and also gain a fair bit of interest in that while you're hodling throughout the bull market, right? So Binance is excited to announce the 16th project on Binance Launchpool, Litentry, a decentralized cross-chain identity aggregator built on Substrate, right? So this is a project which aims to create this decentralized identity aggregation on the Substrate network. So again, we'll go into that in detail in a few seconds. So users will be able to stake their BNB, BUSD, and DOT into separate pools to farm lit tokens over 30 days, with farming starting from 29th of January, 0 a.m. UTC. So Binance will then list Lit into the innovation zone on 4th of February, and open trading with Lit BTC, Lit BUSD, and Lit USDT trading pairs. So that's pretty straightforward. And if you see some of the details of the launch pool, again, the total token supply is 100 million Lit tokens, right? Which is pretty standard which is like in the standard range for many of the tokens. There are tokens which have more than 100 million maximum circulating supply, and there are tokens which have way lower, but this is somewhere in the average or standard range, right? So Launchpool token rewards are among the 100 million tokens, 3 million, which is basically 3% of the total supply, is available for Binance Launchpool program. The initial circulating supply would be 18 million. So again, you can obviously expect that based on the vesting schedule of the Lit tokens, you can see new Lit tokens being injected. And although there's a concern initially, I'll try to address that one when we cover what a Lit token is in general in the next few seconds. So you can clearly see that you can clearly see that Lit tokens are available not only in the Ethereum blockchain, which is the main blockchain for DeFi applications currently. You can also see its contract address in Binance Smart Chain, which is basically the Lit tokens in Binance Smart Chain are BEP20 or BEP20 tokens, whereas Lit tokens in the Ethereum blockchain are ERC20 tokens, right? So that's something that's going to be interesting. I'll cover why I feel it's interesting in a few minutes. So supported pools, you can stake BNB and you can obviously compete with other BNB stakers for the 1.8 million lit tokens that are available for people who stake BNB, which is 60% of what was allocated for the Binance launch pool. You can stake BUSD, which is a stable coin on the Binance platform. You can compete for 300,000 lit tokens, which is 10%. You can also stake DOT and earn a share of 900,000 lit tokens, which is 30% of the allocation, right? So again, you can clearly see the lit farming distribution. Obviously, you can see that the daily distributed total rewards decreases after a particular date. So basically, you get the highest distribution rates from 29th of Jan, which is tomorrow, till 3rd of February, and you get reduced rewards from 4th of February to 11th of February. You get about 75,000 tokens overall in the pool, and from 12th February to 27th you get only 56,250 tokens, and they have also broken down amongst this total distribution how many will be distributed to each of the three pools that they have, right? So that's pretty much it on the Binance announcement website. So let's go to the Binance research page, where they have provided a very brief but important summary of what Litentry token is. So Litentry is basically a decentralized cross-chain identity aggregator built on Substrate. So Litentry is a decentralized identity aggregation protocol across multiple networks, featuring a decentralized identity or DID indexing mechanism and a substrate based credit computation network. So what this basically means is since if you guys are not familiar with how most of the DeFi lending and borrowing platforms work, let's say for example like Compound Finance, which is one of the most famous lending and borrowing platforms on Ethereum, you have to provide a crypto collateral in order to borrow a loan of another cryptocurrency, right? It could either be a stable coin or a non-stable coin ERC20 token, but you would have to deposit a collateral. So let's say you deposit 1,000 ETH, right? You can only borrow about maybe 50% of the collateral's worth in USDC coin or USD Tether coins or something like that, right? So that's collateralized lending, right? There's something called uncollateralized lending, which means let's say for example platforms like TrueFi, which I also covered in my channel. If you guys want to have a look at it, you can go through my channel and find out what my opinion is on TrueFi. So platforms like TrueFi, which aim to avoid collateralization altogether, have to find a way to trust people in order to return back the loan along with the interest, right? In order for the system of uncollateralized lending to survive, there needs to be some form of a trust mechanism, because if you have collateral in TrueFi and you're borrowing it in order to gain interest, on the other end people are lending it to you so that you can borrow, right? And they are earning a small portion of interest by lending it to you. You may or may not repay the loan, and there needs to be what is going to stop you from not returning back the loan that you borrowed. What would be the criteria to hold you accountable for your for you not paying back the loan on time, or for you not paying back the loan with interest, right? So when it comes to collateralized lending, that problem is mitigated, because if you don't pay back your loan borrowed amount, or if you go below a specific collateralization ratio, a portion of your cryptocurrency would be liquidated in order to pay the lender the interest, and in order to maintain this balance in the ecosystem, right? But when it comes to uncollateralized lending, this balance does not exist, and since many of the centralized exchanges use identity verification such as KYC in order to not only to not only for regulatory requirements, but also to ensure that you are identified appropriately, and you are held accountable if in case you don't pay back the loan, right? But in a decentralized mechanism, Litentry aims to be this identity aggregator where the identity of multiple DeFi users are aggregated in a decentralized manner, and it provides this platform which mainly focuses on identity aggregation, right? So why is this important? So what is the difference between decentralized identity aggregation and centralized identity aggregation, right? In a centralized identity aggregation environment, you provide your identity to a centralized body, whom you obviously have to trust that they will hold your identity and not use it for any form of wrongdoings, right? Or they would even protect your identity with proper softwares and storage infrastructures in place. But the problem is, despite having several reputed identity storing organizations, there is still a chance that centralized exchange or centralized entity could be hacked by hackers, because since there is one point of failure in a centralized location, hacking is a pretty common threat for centralized identity aggregation, right? But in a decentralized environment, the identity that is locked in a blockchain would not be easily hacked. So people cannot, or hackers can't steal your identity that easily. And if you have a platform like Litentry, which aims to use decentralization and some form of a protocol mechanism that also verifies proper identity from fake identity and ensures that people who request identity verification for uncollateralized lending platforms, Litentry is the best place where uncollateralized lending platforms can obtain identity of a person who is requesting for a loan, right? So if I did not make that very clear, I'll promise to summarize everything at the end of this video so that you guys can understand. So basically, in short, Litentry aims to provide decentralized identity aggregation. Aims to provide that kind of solution, and it does it for multiple networks, right? And featuring a decentralized identity indexing mechanism and a substrate-based credit computation network. So yeah, basically, if you don't understand what I was saying, I can cover it at the end as a summary. But let's move on from this topic. The objective of Litentry is to enable decentralized identity, or DID, aggregation, verification, credit calculation, right? So that's basically the summary. That's basically the main objective of what Litentry aims to do. So Lit is the native utility token of Litentry with the following use cases, right? So these are the following use cases of Litentry. Litentry token. Payment. Fees are paid in Lit every time a user requests a real-time credit computation via the network. So these are some of the main use cases, right? The first thing is payment. So if someone were to request for real-time identity verification, they have to pay fees in Lit tokens, right? So that's something which is pretty cool. Reward. Third parties that set up indexed identity databases will receive rewards in Lit. Again, it's a reward mechanism to encourage network participation. Staking. Stake a certain amount of Lit to become identity registrar. So obviously, if you hold Lit tokens from, if you get Lit tokens from Launchpool, you can hold on to it, and once the mainnet goes live on Litentry, you can stake it in order to earn additional rewards and also to participate in the protocol itself. Collateral. Used as collateral for DeFi lending and borrowing services. Obviously, since it's a DeFi token, there's obvious use cases for it to be used as a asset which can be borrowed or lent, right? So key metrics of the token as of today. If you see the token type, you have two types of token, BEP20 and ERC20, which means there will be farming opportunities both in ERC20 and BEP20 platforms. So if you want to if you want to farm tokens once the mainnet goes live, I believe that Litentry is planning to have some form of liquidity farming program in Uniswap for the Ethereum blockchain, and pancake swap based liquidity mining on Binance Smart Chain. So I think this versatility is a very smart decision from Litentry developers, Litentry platform, because they're trying to leverage liquidity from both the Ethereum network and Binance Smart Chain network, right? So that's a pretty smart move on their end. And Binance Launchpool start date is tomorrow. The allocation is 3 million lit tokens. The total initial circulating supply is going to be 18 million. And total supply would be 100 million, right? That's pretty clear. So now we are going to go into the details of what Litentry actually is. Litentry is a network that supports a DID aggregation protocol and a decentralized mobile application, right? Litentry network is built on top of the substrate framework with the objective of enabling decentralized identity aggregation, verification, credit calculation, right? So basically, they're using decentralized identity aggregation systems to aggregate people's identities, to verify people's identities, and to enable credit calculation to see if you're eligible to borrow a loan or not, So basically everything that, so if you plan to buy a house or something like that, you would obviously be verified with the credit check. You would be your identity would be verified thoroughly by the banks or the mortgage provider before they provide you with the decision on whether they want to offer you the mortgage or not, right? So Litentry is basically just that, but in a decentralized way, right? It aims to simplify the process of resolving agnostic DID mechanism by integrating DID standards into a modularized identity service. Again, these details are not really relevant to the common folks, so I'm just going to move on. The Litentry mobile application serves as a secure vehicle for users to collect their decentralized identities and manage them in one place. So that's a pretty cool feature, because they're going to have a mobile application launching soon, where DIT holders can actively participate in the network by obviously managing and aggregating the identities in one place. Lit token holders are also able to participate in on-chain governance in an efficient and secure manner. So obviously, governance is going to be a key part of this ecosystem. So let's look at some of the recent news that Litentry has been involved in. So let's start from July 2019. So they received Web3 Foundation grant, which is I believe the grant that is offered to many Polkadot developers. Which is a pretty cool grant. I believe that that was one of the main driving forces for this project. In December 2020, launched the Spark Community Partnership Program. Again, I'm not going to cover this program in detail in this video, but I do suggest you guys to go and read through it. It's a pretty interesting article. Again, in December 2020, partnered with Ontology to build an on-chain identity and credit computation system. So in December, they did partner with Ontology, which is a separate blockchain, which is I believe it's in the Neo family, which aims to obviously be its own version of Ethereum in China. So they Litentry has partnered with Ontology to build an on-chain identity and credit computation system. So they have been mainly focused on building identity verification and on-chain credit computation, which has been their main niche. So that is pretty cool. In January, again, launched the Ambassador program, which is another interesting program, which I suggest you guys to read through it, because I think that that is something that is beyond the scope of this video. So token sales data. So they did have a token sales. You can clearly see that the seed sale allocation was 8.1 million tokens. The seed sale token price was 18 cents per token. So you can clearly anticipate the potential price of lit token when it goes live after Binance starts trading it would be somewhere in the 20s to 40 cents range, because it was already listed at a it was already sold for 18 cents per token during its seed sale. The seed sale amount raised was $1.4 million. Strategic sale allocation is 11.8 million LIT. Strategic sale token price was 25 cents per token, and the strategic sale amount raised was 2.9 million US dollars. So that's pretty cool. It provides us more information about the legitimacy of this project. Obviously, when any token is listed on Binance, you can fairly, you can be fairly safe that this token is obviously not a scam, and there's serious development that's happening in the background. So I believe that these information provide like a brief overview of what this project has been doing so far. So if you see the lit token allocation, you can clearly see that about 45% has been allocated for parachain auction and ecosystem. That's a very interesting thing. The reason is Litentry platform aims to auction a parachain on the Polkadot blockchain. If you don't know what parachain auctions are, I'll probably cover Polkadot in one of my videos in the future. But it basically is, like Polkadot has this feature where they auction out parachains, and by holding a parachain, you can be your own, independent, chain on the you can be your own independent chain with your own protocol and project on the Polkadot ecosystem, right? And it provides interoperability as it's one of its main features, where you can you can function with multiple other parachain based projects, and bring in their tokens to your chain, and send your tokens to their chain. It's a pretty interesting mechanism that I'll cover detail in one of my future videos about Polkadot. About 15% is for the team, which is quite interesting because I would like to know what's the vesting schedule for the tokens which the team holds. I believe that once that the token goes live, we'll be able to get more information on that. But I believe that they have provided a little bit of information at the bottom. But I would like to know more about it, because although it's 100 million token is the maximum supply, I would like to know how the team, who the teams are, and how they plan to, use their tokens, and how long is the vesting period, and all the details, right? I would probably do research on that once once I get more information about this token. Again, 11.89% was allocated for strategic sale, 8.11% for seed sale, and you can clearly see that Binance Launchpool is a small slither of this big pie chart, and the foundation itself has 17% allocated to it. So if you see the release schedule, you can clearly see that 2% of the token is released to the team, right? So again, there's no real concern that the team would dump on you. So that's something that's very, very relieving. But if you see, as the years go by, you can see that there's this peak of 6 to 7%, and then it kind of goes over for the long term. The maximum, release schedule for the team is 15%, which is not at all concerning, to be honest, because I believe that this is one of the most not too good and not too bad vesting schedules for a team, right? There are projects that have much more lenient vesting schedules where there's a risk of the team dumping their tokens on the market. But I believe that based on what I've seen from other blockchain tokens, I believe that this token Litentry has a decent vesting schedule, at least in my opinion, right? And that's pretty cool. So the chart above represents the number and breakdown of all lit tokens that are to be released into circulation on a monthly basis. Parachain auction and ecosystem and foundation tokens will continue to be released after November 2025, which is basically after the end of this chart, right? So that's that. And again, Litentry's community overview. This is again beyond the scope of this video, but I would encourage anyone to read through this, because it's a pretty straightforward information. It shows their community participation and what they have done so far, and also what they plan to do. So this is a pretty good read. Yeah, I do have a decent amount of BNB tokens, which I'll use to stake to earn Litentry tokens, right? So this is their website. If you want to check out their website, you can go to litentry.com, and it's a pretty decent website. Basically, it says identity-based network and tools. Their main focus is identity. So You can probably see those kind of words, present in their website quite a lot. Community governed, which is pretty straightforward. Again, I'm not going to read through this because I believe that I've already covered that before. Fully decentralized, which is also something which is very important. Blockchain powered, again, pretty obvious at this point. And privacy focused, which is again something that we have to trust on, because if you value your privacy and you are trusting this blockchain to hold your identity, they have to do a pretty good job to maintain your trust, right? And since there is no it's a decentralized platform, so there's no, I mean, there are validators for sure, but since it's decentralized, there is no risk of identity theft or anything like that, right? So token economics, this is something that's pretty interesting, and I would like to cover this one. Basically, you can see that if you see in the top right, you can see get lit tokens from the market, and you can download a dApp on your phone, which they are planning to release soon. And by you can request for ID verification request through the Litentry protocol, and what it does is it kind of aggregates identities and ensures the credit verifications are done in a decentralized way. So there are two main features, right? The first one is for identity owners, which is basically common people like you and I. Litentry app, Litentry client services, and aggregated identities. So the aggregated identities interact with the Litentry smart contract in order to ensure that it's decentralized and it's available and it is verifiably true. For developers, Litentry runtime, Litentry SDK, which are again technical information that you can read about in the website, but it provides developers, developers also interact with the protocol in order to obviously manage runtime and ensure that the SDK is functioning properly, right? And this is all done in a trustless, decentralized manner. Although this may be a little bit harder to understand, if you guys go through all the docs, it would be pretty straightforward to understand. So they are building this app, and again, this is how their app would look like. I tried to check out this app, but again, I wasn't able to access their app. So I believe it's not available in my region at the moment. But yeah, these are some of the other information which you can obviously go through, right? If you're interested in it, right? So what is my thoughts on this? My final thoughts on this is basically, I believe that this token aims to solve a unique problem. Again, as mentioned before, if you are to interact with a decentralized lending or borrowing platform, you will probably have to provide your collateral in order to borrow, or if you are by default using a platform that does not require collateral, there should be a means to hold the borrowers accountable, right? And to also ensure that the borrower is safe to the lender is safe with their money being lent to the right person. So there needs to be some form of a credit check mechanism in a decentralized manner, right? And I believe Litentry aims to solve this problem by being this decentralized identity aggregator platform, which also aims to be one of the leaders in this space. They have a very strong thesis for their project, and I believe that there will be many copycat versions of this project coming soon. There will be copycats of this project in every single network that also tries to improve on Litentry's shortfalls. But overall, Binance's Launchpool is definitely going to expose many BNB holders, BUSD holders, and DOT token holders to this new token, since they do provide their contract address for ERC20 and BEP20 token addresses. You can also expect some form of a liquidity mining program in Uniswap or in PancakeSwap on Binance Smart Chain, right? So that's going to be interesting. You will also be able to stake your tokens on this platform to earn additional rewards, and also use this as a governance token to vote on new proposals on this platform. The token supply is 100 million, which although it's not too good and not too bad, based on the vesting schedule that we saw, it is pretty decent vesting schedule where you don't have the risk of the team dumping their tokens on you. It seems like a very reputed project, and I believe that as the bull market progresses, this token would have its own followers who would pump this token to great levels. I don't know what the trading price would be immediately after its launch, but I do believe that it will probably be somewhere in 25 to 35 or 40 cents range, but it will obviously go higher. This is a long-term hold in my opinion, but since I haven't seen its performance yet, I may be wrong. And since it's a really new token, it will obviously not have any price action, for the foreseeable time until people who hold this token long term will see some bumps and some dumps, but there will be a chance for them to hold it on till the all-time high and then sell it if they want, or even hold it long term if the project continues to develop, right? So that's my opinion. Again, none of the things that are said in this video should be considered as financial advice. If you want to stake your BNB, you can do it, but you need to do your own research. Don't take my word for it. And at the same time, remember guys, you guys are not regular investors, you guys are brutal investors, so stay brutal. Thank you very much for watching my video, guys. If you like my video, please click the like button and subscribe for more videos. See you in my next video. Bye.